Hi, I'm Renee the Realtor, and welcome to another episode of The Desert Life. Today I'm going to give you a quick market update so that you can stay updated on what's happening with the market in the Phoenix area. Again, I'm using the same platform that I used last week, which was the Cromford Report. And this is a platform available only to real estate agents that thoroughly analyzes the market using data from Armless, which is Phoenix's MLS, and other data records. Okay, so we're going to start off with the Greater Phoenix area, and this is the monthly median sales as of 9/22 in the Greater Phoenix area for all dwellings. Again, all dwellings are condos, townhomes, single-family homes, mobile homes, things of that nature. Okay, so as of 9/22, the monthly median sales price was $413,900. Now, last week it was $415,000. So we do see a slight decrease there. Now, if we look at just the single family homes, still for the Greater Phoenix area, that number is $440,000. This is the monthly median sales price as of 9/22 is $440,000. This is actually the same as it was last week. So we see that that number has not changed. Again, this is just signaling that the market is still cooling off. Now, last week we did look at a few different cities in the West Valley. We looked at Goodyear and Surprise, and I do want to share with you another West Valley city. We're actually going to look at Glendale this week. However, I want to look at Goodyear just to compare the data so we can see what those numbers look like. Okay, so for Goodyear, all dwellings, the monthly median sales price as of 9/22 was $430,000. Now, last week, if you recall, that number was $435,950. So we do see a slight decrease there. Again, looks like the market is cooling off. Okay, so now let's take a look at Glendale. Okay, Glendale is another West Valley city, and that number, the monthly median sales price as of 9/22 was $384,950, and then as of August it was $384,950, unchanged. Another signal that the market is cooling off, and this is for all dwellings. Okay, now if we look at single family homes only in Glendale, the monthly median sales price was $399,500. And then in August, it was $396,000. So a slight increase there. Yes, a slight increase, but in my opinion, it's nothing to ooh and ah over, because it's just a slight increase. And so to me, it doesn't mean too much. Okay, so let's take a look at the number of active listings per week. So as of, and this is for the Greater Phoenix area, as of the week ending for September 11th, the number of active listings was 7,027. And then for the week prior, which would be September 11th, the week ending in September 11th, that number is 6,995. This is the number of active listings for the Greater Phoenix area. So we do see a slight increase for the number of active listings, which is good for buyers. So that means we're seeing a few more homes on the market, and we're seeing that the prices are starting to, at least the price increases are starting to slow down, which is good for buyers. Now, another piece of data that I want to share with you that we didn't look at last week, but I want to take a look at it this week. And the reason why I want to look at it is because it's just another signal that the market is cooling down. This number is the closings per month that sold over the list price. Okay, I'm going to give this number in a percentage. So as of September is not over, so this number could change. But as of September, the number or the percentage of homes that sold or closed over the list price was 51%. That's still a high number. So what that means is there is a high chance that you will pay over asking price. Now, if we compare that to just 3 months ago, June, if we look at that percentage for June, that was 60%. So back in June, the number of closed listings that sold over listing price was 60%. Okay, so we do see that number has decreased. So just to give you an idea, in June it was 60%. In July, it was 57%. In August, it was 52%. And now in September, so far, it's 51%. So we're seeing that that number is coming down as well, which is another signal that the market is cooling down. Again, there is still a high chance that you will pay over asking price, but that number is starting to come down. Okay, so just something to keep in mind. You know, if you decide to get in the market to purchase a home, just something to keep in mind. So now let's take a look at the Cromford Market Index. Again, this is just a short-term forecast of a balance in the market. If this number is over 100, it's a seller's market. If it's less than 100, it's a buyer's market. And if it's around 100, then it's a balanced market, okay? So as of September 23rd, this number was 325.8. Still way above 100, so it is a seller's market. Now, I want to share with you what these numbers look like earlier in the year. So in June 24th, okay, just 3 months ago, the Cromford Market Index was 422.7. Then in March of this year, it was 509.4. So we went from 500 to 400, and now we're almost in the low 300s. So this number is coming down, another signal that the market is cooling off. Okay, so the demand index is a short-term forecast for demand of resales. If it's greater than 100, it's more demand than usual. If it's less than 100, less demand than usual. And if it's around 100, then it's demand is normal as possible. And that number is 98.3. Okay, I believe last week it was around 97, so just up, slightly, but it's still, demand is still normalizing. Okay, then the supply index, again, if this number is greater than 100, it's more supply than usual. If it's less than 100, less supply than usual. And if it's around 100, it's close to normal. So the supply index is 30.2. Way below 100, so less supply than usual. So we're still seeing that the demand is normalizing, but demand is greater than supply, which signals that it is still a seller's market. So if you're thinking about putting your house on the market, it's still a good time. But if you're also thinking about buying, the numbers are, the market's cooling off and the numbers are starting to come down a little bit, or I should say stabilizing. So that's good as well for buyers. So I also want to talk about what happened this week. I know the Federal Reserve announced that they're going to keep the benchmark interest rate near zero, at least for now. There is a high chance that number will go up, the interest rate will go up. They also announced that bond purchases will be tapered. So this could affect borrowing costs and mortgage rates. This could make the borrowing costs increase, and it can also make the interest rates go up. They are expecting interest rates to go up anyway. So I think either way, it's going to be more expensive to take out a mortgage loan or to borrow money if a loan is needed. And then we also saw that mortgage rates have slightly increased this week. I believe this week they were a little over 3%, and then last week they were like around 2.9%. So we do see a slight increase. So again, they're expecting that the interest rates will increase. It could be later this year, it could be next year, but either way, it's going to affect borrowing, and it could make it more expensive to borrow money. So in my opinion, this is just my opinion. I think that the interest rates will go up, but we'll just keep our eyes on it and monitor it to see what's going to happen. I think that's key. It's always key to see what's happening with the market so that you can make the decision for yourself. So if there's a city that you want more information on, please drop a comment below, or if you ever have any questions, you can always drop a comment below as well. I'm Renee the Realtor. Thanks for watching, and we'll see you next time.